Funding your venture. A funding strategy is written and agreed plan that should be outlined how business is going to raise money and resources in order to carry out the objectives of the organization or group. It determines the financial requirement of an organization or group over a length of time. Generally, funding strategy covers 3 to 5 year time scale and details the plan for the end of that period. Funding strategy should be a practical working document that can be understood by trustees and staff and fundraisers. It should be based on a long term action plan and should be to the time scale and resources requirement outlined in it. The sources of fund can be bootstrapping, grants, debt financing, equity financing with VCs, and angel investment. Funding your venture. You can done by various methods such as bootstrapping. It is a kind of method which involves putting your own resources on starting your startup. There is different kinds of business that comes out of bootstrapping than what comes out of venture money. Remember, it's your money and every dollar counts. When you think like an investor, and one thing that's critical is to look at return or investment for every dollar spent. Ask yourself, can we ask the customer for an advance? Can we get the material for manufacture on credit? Does this asset needs to be purchased now? Could we wait? Are we thinking about to get the product out faster? When you start finding solution to these questions, you will find that your business may become cash generating earlier than you expected. Financial prudence is important. FFF, friends, family, and fools. If you really believe in your business and its outcome, you are putting money in it as well. One definite source is friends, family, and obviously fools. Be cautious as these relationships are fragile and last a lifetime. Chart out a very clear repayment plan or equity percentage. Grants refers to the transfer of funds to a venture without the requirement of repayment, but with condition often in order to support the venture in advancing the objective of the grants. Grants are usually one-time transfer of funds that come from many sources such can be government agencies, foundation, corporations, are potential sources of grants. There are number of grants available: research grant, productization grants, market grants, development grants. Angels. Angel investors are wealthy private investors focused on financing small businesses ventures in exchange for equity. Unlike a venture capital that firm that uses an investment fund, angel uses their own net worth. Angel investor fund businesses in many industries. These are angel clubs, angel network, angel fund. Do your own research and understand where the angel resides in your region. Debt financing. A startup can also raise debt either from venture capitalists or from the banks that specialize in micro and startup funding. Banks and non-banking financing, NBFs, grant loans. These loans so produced can be used for various businesses needs like purchase of inventory or equipment, operating capital, working capital, fund requirement for expansion. Equity financing through venture capitalists. Venture capitalists are companies and funds that raises funds from various sources and uses corps to further fund startup. They are ready to invest in small businesses, funding youth unproven companies that appear to have great idea and great management team. An A-level VC organization that with deep experience, recognition, backing, and the team members like Sequoia and Benchmark. B-level investors like Sequoia, Wannabe, a good fund who's thinking on their own and trying to find unique investment opportunities based on your needs. Chart your funding plan. There are various level to The funding strategy, it can be pre-seed, bootstrapping, or contributing your own capital. Usually the most viable startup or trying to get venture off the ground in initial stage. Seed funding or angel investing. Early stage investing, investing are mostly counts as pre-seed. Early stage are the series A and B. Growth stage are the series C. And liquidity events, and after that is a series of that investing strategy.